I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B here at Verified Investing, and this week we're going to be talking about the volatility in the markets. Last week was one of the worst weeks for the S&P and the markets overall in the past 12 to 13 months. And so we'll be going through all of the different charts to show you where I think they're going based on technical analysis. So stay tuned. All right, so today we're going to start by looking at the S&P chart, and I'm going to be going through these charts in real time with you, so bear with me if it's a little slower than normal. But this is the SPY, the ETF of the S&P 500. This is the weekly chart, and you can see here that we had this major trend line, okay, which became resistance here from the dot-com high to the 2021 highs, and now recently to the potential 2024 highs. And we can zoom in here and go into the daily chart. All right, we're going to go into the daily chart, and you can see that the daily chart had this really nice upsloping wedge, right? This rising wedge pattern. And I was saying back here, right around early to mid-March, I was saying, look, this is running out of room. This is likely to break down, about 70% chance that this will break to the downside. And sure enough, this is what happens. Actually, what really happened was there was what's called a bull trap, right? We had this, let me just erase this to make sure you understand. So this was a bull trap. This was that weekly trend line, right? Going back to 2000, about 2000, 2001. And the price broke above this trend line. It got all of the shorts stopped out. It got all the bulls long, or many bulls long, right? Likely retail bulls. And then what happened is many bulls got stopped out right here, and then the market reversed, okay? So last week was one of the worst weeks in the past 12 to 13 months, and you can see this precipitous fall on the S&P. Typically they say stocks go up the stairs and then down the elevator, or I like to say out the window, right? And that's what's happened so far. Now, on a short-term basis, we are oversold on the S&P. You can see that right here, that, let me just pull up the hourly chart. On the hourly chart, your RSI is 30, okay, or it was 30 here before we've had a little bounce today. And we did put in also a falling wedge pattern, right? You can see this wedge pattern that's formed, and it looks like we've broken out of this wedge pattern today. I was speaking with a friend over the weekend, and I said, likely we're oversold. We should have a little bit of a bounce. And you can see here that there was support right in this area, falling wedge on support with a low RSI, and there's our bounce. The S&P lows were about 494, at least more recently, and now we're at about $500 on the S&P. So what do I think is going to happen, or is likely to happen based on the charts? Well, the 50 moving average, okay, on the daily chart is somewhere around here. Okay, the 50 moving average is somewhere around this region, right? So I think that the price will likely come up to this 50 moving average and then start to roll over and go even lower. Actually, what I'll do is I'll put the 50 moving average on the chart right now so you can see that. Let's just see here. All right, so bear with me. And I typically keep my 50 moving average red. So you can see this pop up on the chart. And you notice that here's the 50 moving average, right? Once we broke down, we had a precipitous fall.
my idea is that we'll likely have a retrace here to the 50 moving average and then fall even lower. So why do I say that? Well, I say that because if you look back at the 50 moving average, okay, on the daily chart, the last time we were below the 50 moving average was November 2023. Since November 2023, we've been above the 50 moving average, right? This is the first time we've broken down from the 50. And look at what usually happens. When you break down from the 50, typically what you'll find is you'll break down, sometimes you chop above, and then you'll fall further below, you'll retest it, and then go even lower. And the same thing happened during the 2021 highs. You can see over here. All right, let me just show you here. Right, so same thing happened. As soon as we lost the 50-day moving average, right, we came down, then we hit the 50-day, came back down, pierced through it, came back down, kissed it again here, and then that's finally when we started to move higher on the market. So keep an eye on the 50-day moving average. It's very important for the overall trend of the market. In my opinion, the S&P was overdone here. It's breaking down from a rising wedge pattern, and we are likely to continue lower. So where do I think it's going? I think, based on technical analysis, okay, in this trend line here, I do believe that it's coming down here around 450 on the S&P, and I can show you why based on my charts, right? So I have a trend line that spans back from the COVID lows. This is COVID lows right here. This is the 2022 lows. And this is where this trend line comes into, right around the 450 area. Another thing, if we were to pull a Fibonacci level tool here, right? Hang on one second. Just go down. So the Fibonacci retrace of that level would be, let's see, 50% retrace is right here at around 440. So this is what I would call a very good buying opportunity on the S&P. That's another 10% plus down on the S&P, but I do believe based on the charts, we will likely get there, okay? So I'll move on now to the NASDAQ, and we can see a very similar story on the NASDAQ. This huge upsloping line from the dot-com highs up to the 2021 highs acted as resistance. Also a bull trap up here as well. And it didn't have quite the same type of wedge pattern that the S&P had, but you can see here that it's breaking down, right? You can see that it's breaking down. My lower trend line or support line on the QQQ is right here around 322. All right, so that would be about, let's see, maybe 20% fall on the QQQ. And this is why I believe this could happen. If you look at NVIDIA here, right, NVIDIA put in a head and shoulders pattern. And we'll have another episode where we'll talk about chart patterns like head and shoulders, inverse head and shoulders, triangles, right, bull pennants, bull flags, bear flags. But in general, the way to look at this is to say, okay, this is the left shoulder, the head, the right shoulder. Typically what happens is you take this amount, right, this distance from the head to the neckline. We call this the neckline. You take this same distance and you take the area from where it broke out, and this is about the area where we will likely go on NVIDIA, right around $700, and we're currently trading at $800. That may be what helps the QQQ or the NASDAQ, which is very heavily weighted with stocks like NVIDIA, AMD, and other tech companies. When those companies fall, it will likely bring down the QQQ with it. The other chart we'll take a look at here, the other semiconductor company, AMD, also formed a head and shoulders pattern. Here's the neckline, and look at this measured move, right? If we take from the head down to the neckline, you're talking about a huge move on AMD somewhere around $110. So this will likely put pressure on the QQQ. All of this in turn will put pressure on the overall markets, and this is why we're likely to continue moving lower. Like I said, we may have a short-term bounce on the S&P up to that 50-day moving average, but one stock that has defied the recent price movements, in the markets is Tesla, right? The markets were going higher as Tesla was continuing to go lower. But look at this chart on Tesla. This was the COVID lows here, all right? And we came down here to the 2023 lows, and now the price just hit this trend line today, right here around 142. So this could be a good buying opportunity on Tesla as the S&P and Qs likely rally back up to the 50-day moving average. So what you might see, what might be a good opportunity, is a buy here as the price breaks out of this falling wedge pattern, okay? Sure, we had a little deviation down here, but what's likely to happen is a move higher, say somewhere up here to $200 or $210 on Tesla. Tesla has been under a lot of pressure because the deliveries have been lackluster, the revenue expectations are lower, and there's some decent competition. They've also had to cut prices, which has cut their profit margin. So all of these things on Tesla that has hurt the stock. But Tesla's a great company. I actually own a Tesla myself. They're an amazing car. And I do think that in the future, with these talks of robo-taxi and the FSD price lowering from $200 to $100, you may see additional value add with increased revenues. So I do think that this is a temporarily unpopular stock, but this is a solid company. This should get a bounce up to the 200 area. However, if we don't bounce and we break through this trend line, likely we'll see a move down to this area right around $100 on Tesla. This would be a great level if you're a long-term investor to start accumulating Tesla. Even here, somewhere around, say, $125 to $100 would be a great area to start accumulating Tesla for the next move higher. And you know what? If it goes lower, here's your next support area right here at about $70, maybe $60. This would be another buy level on Tesla. So very good. Pretty interesting chart. We'll talk about, we'll talk about Bitcoin, and then we'll have one other chart with a special guest right after this. Bitcoin is still a risk asset. It's likely to follow the S&P. You can see that intraday, if the S&P goes down, Bitcoin typically follows. Sometimes there's a lag of a couple days. But what's interesting is Bitcoin is in this upsloping parallel, okay? And it hasn't quite gotten to the highs yet. The highs were about 77,000, maybe a pierce of 80,000. And now what's interesting is we're starting to form a bullish parallel, okay? Anytime you have a downsloping parallel, that's bullish, and this is likely actually to break to the upside. So we may see a break to the upside here on Bitcoin as the S&P gets a relief rally back up to that 50-day moving average. But inevitably, I do think that Bitcoin is overbought. We've had an amazing run here from 16,000. And I do think we at least retrace and come down here to, say, 50, 40,000, maybe even 30,000 on Bitcoin. So there's one other chart I'd like to talk about. We're going to have a special guest in here. Lawton, come on to the floor here. And Lawton is one of our social media gurus. Say hi, Lawton. And Lawton is going to tell us a little bit about his Abercrombie and Fitch trade. He's just getting into investing and trading. And Lawton, tell us why you decided to invest in Abercrombie and Fitch, where you got in, where you got out, what you thought the stock was going to do.
So for me, I didn't even really look at the charts. I thought, wow, Abercrombie. I went to the mall and I saw, hey man, they're kind of popping off. There's a lot of people in the store. I personally bought a bunch of clothes from there. So I bought in on February 26th.
Okay.
at 126.43.
February 26th. So right around here. Yeah.
And it started going on a run into earnings. And I thought, wow, I think they're going to crush earnings. Wow, it's going so much higher. I said, they're going to do really well in earnings. So I'm just going to keep holding, even though I was up, I was up 10, 12%
Sure.
in my investment. And then earnings came out. They did well on earnings, but the stock went down. And I just didn't understand why.
Now, why do you think that happened?
I now know from talking to you and asking you, this is because guidance and expectations,
Right.
they didn't surpass expectations. But anyways, so then I thought, man, all right, it's going to go back eventually, right? Nope, didn't go up. So I got out on March 7th for, a couple dollars profit per share.
Okay, so you bought here. You took it came all the way up here to 140, right? Mm-hmm. And then you started to see it fall, and you said, "All right, I'm cutting my
losses,
cutting my trade," and you took a small profit, right?
Small profit.
Okay, then what happened?
I had some fun when I thought, you know what? A couple weeks later, I was like, it looks like it's going up. So on March 19th, I bought in at around.
So right here, March 19th. Yep.
It was 130.
Okay, 130, March 19th. Yep. There you go. All right. So what happened after that?
I thought, wow, it's gonna go up again because everything will go up again. I could just replicate what I did before. And I put even more money in. I put 60% of my portfolio into
60% of your portfolio.
Because I thought, you know what? I made so much money like that. This trading thing is so easy.
Easy, right?
Some money like that.
And then what happened?
And then you can see from the charts, it started going down. And I kept holding, and I got out on April 8th at 118.
So 118, so somewhere around here. Oh, man. So 60% of your portfolio, and what percentage loss was this?
It was like, I don't know, like 15%.
10, 15%. Now, I'm not calling you up here to, make you feel bad or make fun of you. I'm calling you here to talk about a real trade we were talking about in the office, and to show people that, look, whenever you have a stock that's made such a run, okay, let me just go back here. Whenever you've had a stock that has had such a run here from, say, $15 in 2022 all the way to over $130, most likely it's going to fall, right? And so what's something that you learned from this trade?
That I have to look at the charts, and even though I don't know any technical analysis, you do, so I can just ask you.
So yeah, and I think what's really important to understand is, and I talked about this in the first market pulse, is the Wyckoff market cycle, right? So this is the accumulation phase, right? This is the markup phase. This is the distribution phase. And then this is the markdown phase, right? This is the markdown phase, and then it repeats, right? Then you have accumulation phase. So really, the place that you should have been going long on Abercrombie is down in this area, right? The place that you should have been, selling or shorting, right, was up here after the stock had made this huge run, and that was the key. So to understanding, the key to this was understanding market cycles. It was overbought. You were saying, wow, this stock is going up so quick, I can make so much money, but look at what happens, right? It goes down after it had such a big run, and that really is the key. Understanding the market cycles, understanding the psychology of the markets, learning your trend lines, learning your technical analysis. And good. So I hope you learned a good lesson for the rest of your investing career.
Yep.
Awesome. All right. Well, thanks for coming on board. So I hope you enjoyed that episode of the Market Pulse. We really did go through the pulse of the markets, looking at the charts, looking at the S&P, the QQQ, some of the big semiconductor stocks. And I hope you enjoyed our special guest, Lawton. This is something that you can learn from his mistakes, right? You can learn from my mistakes. You can learn from Gareth's mistakes, from all of our mistakes that we then correct and put into practice using technical analysis to improve our success rates every day here on the live day trading floor and also in the swing trading service, and so on and so forth. So continue to come back. We'll have more education every week. Thanks for coming. Take care.